No doubt registrants who abuse the rules should face the full force of the law. Oh man, threaten the government, right? Let's go. Threaten the realtors. Let's go. I'm going to lose my license. Good morning, investors. Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. There's absolutely nowhere to buy in the GTA, and so today I want to ask the questions: how did everywhere become Toronto because of COVID? And what arguments are pundits using today on why we're going to have a boom and a bust through 2021? And then we're going to wrap up talking about flippers. Are flippers making less money than you? That's right. Some of the things we're going to talk about today. We like to have some fun on the show as well. Thank you for joining us. If you haven't already, please subscribe to the show. But I love keeping track of what's going on in the markets. And today was a crazy day. In fact, John Pasalis left a comment on Twitter. I wonder how many first-time home buyers had their down payment savings in Bitcoin. No kidding. Today I saw Bitcoin was down 30%. Ethereum was down 40%. Dogecoin was down 50% with a massive bounce that happened after. But how crazy is that? Gotta love the casino. Imagine if real estate prices dropped 50% overnight, what news that would make. But what's the difference between a casino and a church? You actually mean it when you pray at a casino. We got a lot of investors praying out there these days, guys. We're going to have lots of fun today. We're going to learn a whole bunch of stuff. I want to start off with the article of the day. It's in Maclean's magazine. This called Nowhere to Buy. So I want to really take some of the highlights from these articles as an investor and a broker myself. I want to know, where's there opportunities in a time like this? What better way to get info than the news? And I want to chew on some of this with you today. So one of the major things I got out of this article was GTA's affordability is down the tube. Interviewing with John Pasalis, he says he recalls a recent message from a prospective home buyer. So he had this client who had saved $140,000 down payment. If she'd been buying in the first quarter of 2020, he says there was 17% of all GTA 3-bedroom houses would qualify. She could have picked up one of those units. Well, this year, only 3% are available. Here's what he says. It's terrible. I don't even know what to tell them. They have a really good deposit, really good incomes. It's just that house prices are so high, they can't buy anywhere. They can't buy in Toronto. They can't buy anywhere. Everywhere is Toronto. The reality is nobody can afford what they want around Toronto. Clients are now shocked at how little they can even get for $1.5 million. So what's happening? Toronto buyers are crushing small towns. This is where the article goes. The rapid onset of multi-bid wars and offers of $100K over asking have bewildered local buyers and agents alike. Here's a quote from Barb Morgan. The city buyers, this is a realtor, by the way, a local realtor in one of these small towns in Tillsonburg. The city buyers are more savvy. They're used to dealing this way. We aren't. This idea of 100,000 over asking has not been, she says, the mindset in Tillsonburg in my 23 years working. So small towns are getting more and more worried that they're gambling. It sounds like broker Barb is going to throw in the towel. And I completely understand. I used to visit a casino until their top floor restaurant started serving beef. That meant the stakes were just too high for me. But one of the other things they point to in this article is a generational battle happening between millennials and older Canadians. Add in growing crush of millennials, the oldest of whom turned 40 this year. And their desires to have kids and find space for them, right? So they want to start to grow. They want to move out of that little condo, maybe get their own space. To make matters worse, the older Canadians, as they call it, leery of downsizing into what? We're going to go supportive living, right? Or condo complexes where they'll be closer quarters with their neighbors. This idea, this desire for space and stay away from those retirement homes, right? And so the result is Canadians, not just Torontonians, Canadians and people across the GTA are getting priced out. In a poll from RBC in April, 36% of non-homeowners under age 40 said they'd given up. They gave up on buying a house. Bun this, right? And people only see it getting worse. In fact, 62% believe that a majority of Canadians, 62%, the majority will be priced out of the housing market in the coming decade. I don't disagree. Will leave us with a nervous central bank. The article continues, even the Bank of Canada's Governor, Tiff McClem, has called it worrying. He says this: strength in the housing market is contributing to Canada's economic recovery from the pandemic. See, we rely so heavy on real estate, but it may also be intensifying housing market imbalances and household indebtedness. So the indebtedness, the lack of affordability are just costs of doing business in order to save the Canadian economy. And that's really, truly what we've been experiencing. So here's an option they give that the federal, provincial governments could do. They say taxes to deter property speculation, as New Zealand did this year by taxing gains on quick property flips. So you get in, you get out, you pay for that, right? Or eliminating mortgage interest deductibility for investment properties. That's not an expense. I love the beauty of that, by the way. Mortgage deductibility. If you don't know what that is, look it up. It's fantastic. But so many tools are available, but the Trudeau government's budget played it tame. Only affordable housing and the foreign buyers tax were applied. So what happens with that? Well, the intervention they described with his budget in April, and we covered this in the show, but just as a recap, Ottawa added a national tax of vacant homes owned by foreigners. So if it's vacant, if you fill it, you get past that. But while outside speculators may make convenient scapegoats for policymakers, the COVID-era surge is almost definitely of Canada's own making. Do you guys think this is a problem coming from foreign soil, or do you think this is something that we have done to ourselves? I think it's the latter. The reason they say Tillsonburg, our friends in Tillsonburg, is going up is not because of some oligarch in Moscow is listening to Stompin' Tom's song and wanting to buy up the place. I love that. Okay, anyways. So there's another tweet kind of speaking to this. Can anyone get at T.O. Adam Vaughan to respond to these ideas? We want to talk about housing. Why don't we listen to some of these Canada Housing Crisis says? Here's what some of their ideas. Why not end blind bidding? Why not introduce a speculator tax? Why not introduce a vacancy tax? Why not increase down payment requirements for investment properties? All of these things are very easily done, and they say none of these hurt precious homeowner equity. Is that not what we've been trying to protect? So as we treat homes like casinos, the only ones hurting now are future home buyers. That's how I see it. At least the prayer groups are getting more fervent in my youth group these days. Isn't that how Donald Trump bankrupted so many casinos? Hitting on anything 12 or higher? Okay, so sometimes I read these jokes and I'm like, why would someone write that in my script? This is brutal. Anyways, Donald Trump found out the House always wins. Okay, do you vote for affordability? It's a question to you guys as an audience. Do you vote for affordability or rapid price growth? I think I asked this question a lot on the show because I honestly believe it. Can both of those two things exist? I think not. So which one do you vote for? Comment down below, affordability or rapid price growth. But the article finishes off here. It says, it could be time for policymakers to re-examine priorities. Quote, we're at a crossroads and they need to decide, do we want single family houses to primarily be something that people can buy into and move into and live in? Or do we want this to be a lucrative asset class for both domestic and international investors? There's your question. Put that down in the comments below, your thoughts. So obviously we've got this sprawl to the outskirts. So it brings me to this article, Blog TO. We're just going to quickly cover over this. Which areas are doing the best? In fact, the article is called, Here's Where Home Values Have Increased the Most in Toronto, and it's not where you'd think. So the question is, where are prices rising the most? According to Properly, it had all of this data, and thank you tech firms. But what they found was Scarborough. Scarborough was number one, staggering 25% higher as of May 2021, followed by York, up 21%, Etobicoke, 19%, and East York at 18%. So clearly it's not the downtown, it's the outskirt communities that seem to be outperforming so far. So far, Blog TO also another article is saying we can go further, right? People leaving Toronto are driving up housing prices in Ontario's cottage country bubble, question mark. Here's the article. As Toronto prices are projected to only continue to skyrocket, rural areas are looking more appealing, including cottage country. So there's a report from the recreational properties at REMAX, and they had data released this Tuesday, and it anticipates average sale price growth of more than 30% for certain types in some areas by the end of the year. So the expectation is that, yes, you've seen extreme price growth, which we'll talk about in a second, in these cottage countries, but that's not going to end here. No, 30% more. Why not? But here are some of the areas, right, that we've seen major jumps. Peterborough and the Kawarthas, where average property price has gone up 70%, Oh, we're just getting started. That's since 2019. Halliburton County climbed 76%. Oh, here we go. Niagara region, waterfront and non-waterfront up 77 and 79% respectively. And listen to this. Properties with water access jumped a shocking 160%. Oh, here we go. Now we're getting warmed up. Let's go. Let's keep these, the hundos, yeah? Sudbury, Manitoulin, and French River were some housing types that increased 180% between 2019 and 2021. 2 years. Wow. 90% growth times 2. Norfolk County, where condo prices rose 123%. You're sitting on your little Toronto house. You're like, 8%. Rideau Lakes, where houses with water access shot up 221%. Taking numbers. Let's go. Bidding wars. No bidding wars. I like the blind bidding wars. It's kind of fun. No. And then you sit back and you say Toronto. Yeah, Toronto's in a bubble. Definitely. The real zoo right now is Cottage Country, right? That's a casino I'd rather not be playing personally. Too many cheetahs. All right, let's get into our next topic. What arguments are pundits using for a boom and a bust in 2021? We're going to start off with the arguments for a boom. Actually, it's going to come from one article, which I thought did a pretty good job answering some of the questions you've probably got about our market. We're interviewing our friend Benjamin Tall, Deputy Chief Economist of CIBC World Markets. This is an article from thestar.com. And so, by the way, he was one of the folks that anticipated a major slump in real estate this year. Well, they say 1 in 7 friends have a gambling addiction. So my money's on my boy, Ben. Here's the first question. Toronto home prices are at an all-time high. What's going on? Is it just low interest rates? His response, yes, interest rates are basically zero, but there's more of a reason behind this. In fact, he goes on to talk about the stress test, right? The stress test makes it, yes, you can qualify for a mortgage at 2 to 3%, but you still need to qualify at 5% almost, right? And for every dollar decline in wages, the government injected $7 into our economy. That kind of helps. Another ingredient is what borrowing activity for the future. So what he says is we're actually, I love this, borrowing activity from the future. So our future is we're paying the price down the road. And here's how. Everybody knows these interest rates won't last, right? Or at least they're not supposed to. So there's a sense of urgency to be in the market now if you plan to wait a year or two, forcing up that demand up front. But it's not demand. He goes on to talk about how it's pressure from supply. We'll talk about that in a second. But he asks, well, the measures that we heard in Ottawa, will that change anything? Or would a vacant home tax have any impact? Well, he says the reality is we're facing supply issues. Supply. And we're using demand tools. That's your problem, which by definition cannot be successful. If we don't deal with the supply issue, he says, if you believe, I love this quote, if you believe that Toronto is unaffordable now, just you wait. So are we hurting for supply or stimulating demand? What's the issue here? Is it supply or demand? Place your bets in the comments down below. And before you tell me it's against my religion to cast bets, no, it's not. This is a British casino. Even if you lose a few pounds, you still win. So here's the thinking. I was listening to a podcaster that I love to listen to, and Peter Schiff is his name. And I love the concept. They asked him about, he was kind of talking about housing. And he said, it's not only a supply issue, but speaking to demand, he called it inflation, but he's saying it's an inflation problem, which obviously is what's going on in the demand side. And this was his concept. I thought it was a really good analogy. Imagine if we printed $1 million for every single person in Canada. Everybody gets $1 million. Well, naturally, people will all buy Ferraris, right? But would we sit back and say we have a Ferrari supply crisis? No, we have a demand problem. So you print all of this money and yet we sit back and say we got a supply issue. Supply of what? When we're expecting 400,000 immigrants next year. Let's push those numbers up. As John Passalis likes to say in his Twitter post, Canada's economic game plan post-COVID is, number 1, our housing supply can't keep up with demand. Number 2, it doesn't matter. We'll still boost immigration to historic levels to help the economy and inflate home prices further. And number 3, we'll hire economists to say high home prices are a supply problem. Hammer on the head, no? They asked him another question. Benjamin, are realtor practices such as blind bidding bidding wars. We're going to talk about what Treb is saying about that in a second. Is that what's fueling price increases? Well, the response is the blind bid architecture clearly should be removed. Even the banks are saying that. Crazy. It just makes sense, and I think it's coming. This is based on him seeing other folks with loud voices on the air announcing it should go away. But he says anything to do with flipping and speculating, so those two things, flipping and speculating, that's the problem. They should be penalized through taxation, but I don't think those are causes of the problem. Okay, so let's talk about what Treb is doing about the blind bidding war, which I've been saying we got to deal with this for a while. We should have been doing this back in 2017. Our bidding war is going to go down in the future. I really, really hope the market can deal with itself, but let's not assume that that's the case. And maybe if there's a problem with the process, we should fix it. Well, I got an article from the Toronto Real Estate Board as a loving member, and it actually was, when I read it, because to be honest with you, I wanted to find highlights from it, but I just got to give you the details of what they're advocating for as it relates to blind bidding wars. And you tell me, warning, this email hurts my soul. Tressa, this is the new concept that we're going to have instead of REBA. It's kind of the way we're going to operate. The rules, the act, the new act. So here's what they say. It will have provisions in multiple offer situations for, quote, seller's discretion, which we knew was coming, by the way, which was to disclose the contents of an offer to all parties making offers. But Treb is cautioning, they're saying, the province needs to ensure that it also requires consent from all parties, as seller and buyers. So they're suggesting we need both the buyer and the seller to agree that all the contents of every single offer being presented at a blind bidding war needs to be approved before that can happen. That is safe. That is sitting as safe as you possibly can get. If I have a seller, there ain't no way on God's green earth that they're going to be opening up that bidding war, right? Am I crazy? Here's what they get. The article continues. Fundamentally, the home is the seller's property. It's their choice, right? The seller should have the right to market their asset as they wish, naked and on a big billboard. Oh, wait, maybe that's not allowed. Anyways, next point. Government should be careful of getting in the way, as any intervention on the buyer-seller side could distort the market and lead to negative unintended consequences. It could mess with your tax dollars. Be careful, it could have unintended consequences, such as compromising the personal and private information of parties to a transaction. Didn't we come up with that decision on that recently? I mean, your house is available to be seen by the general public as long as you get a login because of the Competition Bureau for years and years to come. Yet all of a sudden, this is an issue on a bid or multiple offers that didn't actually end up working. Anyways, you're starting to see where, like, yes, we are defending the consumer. We are working, and I love Treb. I truly love Treb. I'm a Treb member. I have to say that. My lawyer tells me to. But if we're going to do something about blind bidding wars, let's do something about blind bidding wars. Let's not just pretend we're going to do the same thing we're going to do before and then add extra repercussions, or extra roadblocks here. The article continues. My heart shall continue to break. But I think this is good stuff. I love sharing this with you because I want you to see Treb is a very strong advocate. In fact, they knocked down, I think, in a way, almost single-handedly, the primary residence exemption being removed. So in some ways, I think they actually protect the consumer. But this is why I think it's important to see their stance on it. They say, for those arguing for the mandatory use of an auction process, this guy, as a way of controlling rising house prices, experience with other jurisdictions that use an auction model, looking from our analysis, auctions, they say, we can't suggest that auctions do not necessarily lead to lowering of house prices and can create challenges for consumer protection. So there's no proof that if you take away blind bidding wars, that it's going to actually make homes more affordable. So let's just not talk about it. My goodness. That just goes to show you that the arguments in favor of removing the blind bidding war and having opportunities for that are kind of negated when you go to say, well, then why are you even talking about it? If it's not going to do anything, maybe do research on it before we start throwing out these thoughts. Anyways, to wrap it all up, they give a summary. Under the current code of ethics, this is speaking to realtors, right? This is realtors. You as realtors registrants are not allowed to divulge the substance of competing offers and can only disclose a number of written offers in multiple offer situations. That's currently contradicting some reports calling into question realtor motivations on what information is disclosed. They're making it very clear. This is absolutely the case. Realtors are not allowed to disclose any details of the offer other than the number of offers. No doubt registrants who abuse the rules should face the full force of the law. Oh man, threaten the government, right? Let's go. Threaten the realtors. Let's go. I'm going to lose my license. Anyways, that was a loving letter written by our president and fierce leader from the Toronto Real Estate Board. In the meantime, they say we shouldn't take our eyes off the ball on the most important challenge facing the real estate market today. That is lack of adequate supply. I love it. I love it. Anyways, I thought I'd share with you because I think that's such a fantastic letter. I love warm fuzzies. We better figure this out quick though, right? This isn't a small bet anymore at a casino. At this point, we are betting the value of our homes. Then again, in Canada, the house always wins. So the article continues with our friend, Mr. Tao. What do you think will happen when interest rates do start rising? And actually, before I keep running off on this, I think what's important with the blind bidding war, as I'm saying, it's a pro argument for price growth. We can see if nothing, in fact, changes in the blind bidding war, I do anticipate that would push prices up. I do believe that that's happening. I do believe. That's my thoughts. Anyways, he says everything depends on the speed of the interest rate changes, right? The speed is as important as the magnitude. Inflation is a lagging indicator. If we wait too long, we start to see these high levels of inflation and then we respond. It might mean that we need very quick and high, large responses, right? It's like a brown spot on a banana. By the time you see it, it's too late, he says. If you wait too long to raise rates, you end up raising them too quickly. We're going to talk about interest rates further in the show as well. But they asked him, do you expect the soaring housing prices in smaller towns to last? And he said, I believe, I'm not the only one, I believe in demand in smaller cities will slow or even reverse because the office will remain an important part of our job market experience. Interesting. There it is again. Small towns are becoming a gamble. If you're going into these markets, you better have a strategy. And so here is my proven strategy to walk out of a casino with a small fortune. Ready? Just walk into the casino with a large fortune. They asked him, is foreign investor interest in Toronto real estate diminishing? Of course, he says, no. Arguments in favor. I mean, you look at all of these arguments, right? Inflation, the amount of interest we're going to hear right now from non-Canadians to come to Canada. Listen to this. There are 500,000 Canadians residing in Hong Kong. Since COVID, about 60,000 to 70,000 moved back to Canada. Imagine if a portion of those Canadians moved back to Canada. Anyways, they asked him, has affordability changed vis-a-vis other major cities? And he's saying, no, Toronto's position hasn't changed much. I don't know if that's true, to be honest, but he's the economist. Relative to other global cities and even Vancouver, Toronto is still affordable. In that sense, I guess it's partially true for what you get, right? For what you get. What kind of housing supply should we be investing in? They asked him. Ooh, $1 million question. Here's his response. For the low-rise housing segment, we have to release more land and municipalities have to accelerate the process dramatically. It takes years now for developers to get permits. I think by the end of this show, you're going to see a lot of opportunity in the low-rise ground type houses that it's kind of woven through this podcast. And naturally, obviously, a pull away from condos as far as a short-term opportunity, but you'll see that as that kind of plays out. Secondly, he says, we need more purpose-built rentals and we have to break the stigma. There's no stigma about renting. Is there a stigma? No, you're just a renter. You cute little renters. We have to break that stigma, right? He says, I would suggest that if you're 35 years old, married with 2 kids and you're renting, there is nothing wrong with you. That's very noble, very noble. I expect the rental market, he says, in mid to late 2022, in the next breath, to be much like 2019 when it was very tight. That's for all of you that are working against or very concerned about having a rental property in the city. There you go. Coming from an economist that I agree about 50% with. John Pasala said, surprise, surprise, COVID did not kill urban living. Just showing a chart. This is just a bit of an update. I'll actually give you by the end of this show, we're going to have a market update for you on what happened mid-May and over the last week as well. But we're seeing that condo rents are up about 10% since January. Interesting. Rents are on the move. Not a trend yet. Not a trend yet. I think it's a trend. Some people don't think it's too early. 10%. Not a bad little shift in the last few months. But here are some arguments for a bust. It's going to crash. Crash. I haven't heard the word bubble in a while. But here are some arguments for a bust. Starting with the Star. And first off, I'm going to tell you this. If we're going to break this down into 2 categories. First, the weak argument for why it's a bust. And second, the stronger, more tangible arguments for why it's a bust. But I think this first article is important because it speaks to what a lot of people that are against the market would suggest is a real problem. Here we go. So this is from thestar.com, and the article is called "The Bank of Canada is Charting a Path Toward a Real Estate Crash." Listen to this. With real estate prices detached from local incomes in every major city now, especially Toronto and Vancouver, the latest surge has proven that economic fundamentals are not the root cause of housing prices. See, this is very vague, though. Very vague. Here's how they say it. And it's fun. That's why I included it. But still vague. We're going to get some more tangibility. Unemployment goes up, so prices should go down, right? Not in Canada. Immigration goes down. There should be less demand, right? Not in Canada. So we hear the detached from fundamentals, right? Businesses are closing down every day. That should equal less entrepreneurs making money, right? Not in Canada. So here's how they wrap it up. Modern Canadian entrepreneurship is not about creating something of value. It's about hoarding real estate. And I get a lot of people listen to some of my podcast interviews because occasionally I'll have a person with more than one rental property on the show, and they'll say, this is the problem. How can you support such vicious, aggressive behavior? But when I listen to articles like this and that kind of response, it sounds like somebody is a little jealous they didn't invest last year. Should have been following our show for more than the last couple months. But bro, literally you could have bought on a reserve in 2020 and made money. But no. You know what it's called when you're having second thoughts about booking a room at a Native American reserve? Or sorry, a Native American casino? Ugh. Okay, I'm gonna repeat the joke because I feel like this is a good one. This is a good dad joke, okay? You know what it's called when you're having second thoughts about booking a room at a Native American casino? A reservation. Go back and listen to that a couple more times. It might say, I think it's funny. Anyways, but no one else seems to. That's all right. That's okay. It's just you and me here. Moving on. With many asking, how can prices be so far detached from incomes? The answer is simple. To afford more than a condo in many parts of Canada, you need to earn your income elsewhere. This whole conversation of we're becoming a place to park your money for the rich, right? So for the next generation, who are now faced with the task of picking up the pieces from the global pandemic, the Bank of Canada has a message for you. Listen closely. Keep working hard, but don't expect to own a house or even a townhouse. It's a life of renting for you. Because we need to keep the investor class happy, whether foreign or domestic. If you're lucky, we'll create a market where you can afford a condo. As an investor myself, I am concerned. I don't think every investor is standing on the side of agreeing that we should be able to hoard real estate and make wealth that way, but I didn't make the game. I really didn't. And I want to speak to an opportunity that is a real opportunity for people to build wealth. That's why I'm so passionate about it. But I'm all for destigmatizing renting. I'm with you, right? As long as I'm not a renter. I shouldn't laugh at that. That's really bad. It's really bad. Some cities, major cities around the world, it's okay with renting. That's okay. We'll create housing for you, right? Being sad about the market, though, in my opinion, isn't a strong argument. Here's some that, in my opinion, pass the vibe check. Here's a few, and all of them are from Better Dwelling. I thought, you know what? There's a lot of Better Dwelling. So I thought I'm just going to get all their points because every single article they write is about why the market's going to bust. And here are some of what I think are reasonable points. Argument number one, income requirements. According to the NBC, the National Bank of Canada data for Q1 2021, the minimum qualifying household income to carry payments on typical home reached $130K. Wow. Minimum for the average. And if you're not in a condo, you can bump that amount to 164. In other words, only the top 5% of Canadians can now afford the mortgage payments on a non-condo across Canada. Home prices aren't necessarily going to come down. They're just not going to be made available to you. It's for the select few, the elite in another country. But when we look in Toronto, we see to qualify for a typical home, the minimum needed is $170,000. And if you're not buying a condo, it's $180,000. Start saving up. In fact, not even all of the top 5% would be able to clear, they say, that barrier. The minimum qualifying income is now so high, the vast majority of homeowners wouldn't be able to ever buy their own home. Since mortgage rates will only go higher from here, there's only two possibilities. Number one, home prices will either need to fall, or number two, incomes will need to surge higher. Surge. The latter option seems near impossible considering the amount of income needs to rise. So they say home prices must fall. They must. Argument number two, insolvencies. Insolvencies, we're starting to see a big jump in insolvencies. According to the Office of the Superintendent of Bankruptcies, March saw a sudden increase in filing. The unexpected monthly increase was the biggest in almost a decade. Here's the numbers. It's up 22.8% from a month before. Wow. It still works out to less filings from last year, but we're starting to see an increase. Could this be the beginning of the end? Let's watch and see. Creditor programs and government aid helped delay, or even drop maybe insolvency filings. However, just because the lenders deferment payments, which I know a lot of you guys were really enjoying last year, it doesn't mean people can pay them later. It buys enough time to fix some household debt issues, but for many, it only delays the filings. A lot of people were looking at insolvencies and the risks that we had last year, but it didn't take place. A lot of people took advantage of these delays in mortgage payments, and they were saying, look at all these people, they're just deferring payments, they're gonna go insolvent. Within that group, I think at this point, we've recognized that the vast majority of those were not going to go insolvent. They're taking advantage of an opportunity placed there. And the small, maybe select few would have gone insolvent. And this article would make the case that now is the time of reckoning. But it sounds like a rough march for some marriages. My wife thinks I care more about gambling than our kids. That isn't true at all. I'm going to stay at the casino until I win my daughter's tuition back to prove it. You don't have a problem. It's their problem. It's not your fault. Argument number 3. Home price expectations are on the down. They're on the down. Listen to this. According to BMO, Robert Kapchich weighed in on the latest home sentiment. It's crazy to see the drop is now taking place. Now, this isn't home prices dropping. This is the expectation of home prices going down. But what I do find interesting when I look at the little chart here is that the dip that we're starting to experience reminds me a lot of 2008. In that, we saw prices drop very quickly. We saw them rise just as quickly, in fact, overshoot what they were at, the path they were on pre-2008 collapse. Meanwhile, we then saw a second drop, a second crash, if you will. We were talking about this last year. Is now maybe that time for a second crash? The crash simply being the opportunity for us to get back on track on where we were before all of this crazy nonsense began. But here's what they say. Many of the factors that created a tight market are beginning to reverse, according to the bank. Wow. Home sales are still high, but cooled in key markets like Greater Toronto. New inventory starting to appear, which in my opinion is a fantastic thing. I hope that continues. Policy, we're going to look at that. Policy is looking a little more hawkish with rate hikes now coming sooner than expected. Most important, people are thinking about a post-pandemic life outside the home. They're not so fixated on real estate, perhaps. Argument number 4 on why we're going to have our nice little bust around the corner. Interest rates. I promised you we were going to talk about interest rates, but are interest rates expected to rise sooner than expected? I think yes. The Canadian economy is recovering so fast. It's funny how you can have it both ways, right? The economy is struggling, but the economy is doing so good that we're going to have to raise interest rates. It's going to affect your housing prices. I love how it's so circular. But we looked at NBC, who accelerated in their forecast the timeline for when rates are going to go up. Now, rising inflation is expected to force central banks' hand rising the rate by the end of next year, 2022. Previously, the hike wasn't expected until 2023. In fact, is that not what they said was going to happen? But everyone's saying, no, I know you said it was going to be 2023, but it seems as though you're going to have to move by 2022. Stop holding those cards so close to your chest. The bank now sees BMO that the overnight rate rising by 25 basis points in Q4 2022, bringing it to a 0.5%. Another 225 basis point hike are expected over the 2 quarters to follow. These would be, in my opinion, slow and progressive increases in interest rates, which would be good. If we do it early enough, maybe we can get away with such a maneuver. But if we wait too long, because Mr. Trudeau is loving the opportunity of spending his stimulus at a time when it's just so affordable, you'd be crazy not to invest in the future. Could that mean we delay it and therefore shoot ourselves in the foot? The bank even thinks there's a possibility of a hike sooner, maybe even sooner. I tend to agree with this. I know we've seen articles go up and down on when interest rates are going to happen. I tend to think by next year, we'll probably see an attempt at least to increase interest rates. But even though the Bank of Canada isn't showing their hand, something's got to give. I'm sure Tiff McClem has something up his sleeve. I'm sure. There's a reason casinos in Las Vegas don't hire girls from California, because they can't even deal. Oh, that's good. We're going to get into some hot topics. If you haven't already, please subscribe to the channel. And if you haven't, join our investor list. We got some off-market properties and small apartment deals we like to send out occasionally. But like this video, please, if you on a scale of 1 to even can't. All right, first hot topic. The second largest country in the world, Canada, is running out of land. We're not, with all this land mass, how are we not effectively managing our space? We're running out of it. That could force an expansion of the idea of a home to include condos and rentals. Funny how we come back to this point. All of these things, it's just there's no more land, we're running out of space. So we need you to be able to be comfortable to live in a condo and a rental. But I think that this argument comes at it from a better way because it gives a little bit of context. This is speaking with Robert Hoagie, economist of RBC. He says we're running out of land in Canada is a relatively recent phenomenon and recognize in Toronto, in the GTA, because of natural borders, natural restrictions, we are, in a sense, on an island. We are. But he says this. It's a recent phenomenon compared to Europe or Japan or other parts of the world. I think that for our future generations, home ownership is going to look a lot more European, for example, than it does today. I like to look at it as Canada as a bit of a teenager. We're kind of in that awkward, weird stage, of our life cycle, probably investing in crazy things like Bitcoin or whatever. Taking extra shots, man. Extra shots. Rude boy. Right? But maybe we're going to look more like some of the other large adult markets around the world. But this is not how we're going to do it. The way that we're producing housing is not in line with that lifestyle. In fact, because the way in Canada we live is different from what the builders and how we're producing kind of want us to live. Nearly 60% of homes last year in 18 communities in and around Toronto, Vancouver, Montreal, and Ottawa were for single-family detached, 60% of home sales. According to data compiled from Bloomberg, only a quarter of the sales in these places were for apartments. So more people are buying single-family homes. But when we look at what's being built, 60% of new housing stock is apartments and just 25% are detached homes. Something's got to change. Either the builders got to start building something different, or we really do got to change our psychology around whether we're okay raising a family in an apartment building. Still, developers don't seem to be responding. In Canada's metro areas in March, the percentage that were single family actually fell to 19% from 23% the previous year, according to government data. So the idea here is we need a shift in mindset. They wrap it up. Mr. Hoagie wraps up like this. If we think of first-time homebuyers, a young couple starting out, it's much more realistic for them to be considering a condo apartment as a starter home from an affordability standpoint. This is the norm for large global cities. I'm hard-pressed to think of any major global city where a single detached home near the urban core is affordable. Couldn't agree more. Couldn't agree more. If you want to invest in a major city, you need to gamble a little bit, no? Except for China. There's no casinos in China. Because they don't like to bet. Next, that was a really long hot topic. Don't worry, we're going to speed it up here. Mini mid-rise. You ever heard of these things? Kind of cool. A Toronto architecture firm is proposing an alternate solution that would create more housing. Created by a team from Smart Density, the mini mid-rise is a compact, no kidding. If you look at the picture, it's like a single family home size, up 2 to 8 stories, development style, which apparently is more popular. They actually won a contest called the Shift Challenge. And apparently it's more used in European cities. So maybe we do something like that. Is that an option? Is that an opportunity to help the housing? Next topic, what the Bank of Canada did, the greatest transfer of wealth in history. As we sit back and we look at what took place over the last year, I don't think we've really covered this, but I think it's such a great point. What we really experienced this year through inflation is the biggest transfer of wealth in history. This is actually a better dwelling article, but I thought, you know what, this one has some legs to it. QE can boost wealth by increasing the value of assets such as the investment Canadians have in their registered retirement savings plan or company pension plan. That didn't just come from anyone, by the way. That came from the governor of Bank of Canada. So now they're starting to sit back and say, you know what? Maybe all this money printing that we did is actually benefiting some Canadians and not others. Well, no kidding. But of course, these assets aren't distributed evenly across society. As a result, QE can widen wealth inequality. We will look closely at the outcomes of QE here and elsewhere, and we will work to more fully understand its impact on both incomes and wealth equality. Sorry, not sorry. We're going to look back and see what kind of people got rich because of our money printing. I'll tell you, people who had assets, people involved in equities, not people saving a down payment. What a terrible idea. That money that's sitting in your bank account losing value by the minute. Not even wearing a watch. TREB calls for adjustments to OSFI. Okay, so seeing as we were so successful with our last TREB update, TREB is advocating. It's an advocate, right? It's more of a lobby, but we're going to call it advocating for you, calling for an adjustment to the new OSFI stress test. Well, they've kind of opened things up. OSFI's opened things up to look at feedback from their B20 guidelines, that stress test we've been really enjoying over the last year. Here's what they want. Couple things. Number one, Korea agrees actually, which is interesting here. So we're kind of getting, it's a bit of a real estate suggestion, not just a Toronto Real Estate Board suggestion, but they're suggesting regional stress testing, not Canadian stress testing. It should be by region, removing the test from renewals as well as the second thing, renewals. You shouldn't have to deal with the stress test. So those are the two suggestions that they're making. For regionalization, which I think is maybe the more interesting of the 2 points, they would like to see different areas have different rules. So what applies to them should be different for us. We're Toronto. They suggest factoring in mortgage activity, employment incomes, and the cost of living. Something sounds fishy. Something sounds fishy of what's coming from Treb's mouth. Why would there need to be a difference in how much each city can be leveraged? I don't get that. What's the matter with having the Bank of Canada holding the cards? Why do we need to go hire some random blacksmith to do it? After all, he who smelt it, dealt it. Anyways, we'll wait and see if any of that plays out. But just as a bit of a weekly update for you on what's going on in the market, from mid-May, we're actually starting to see freeholds are down the number of sales in the 416, which is good in the first 15 days of this month versus the first 15 days of last month. Now, this is obviously different from what we would see in a normal seasonal month. May is usually the highest. So I'm hoping that that means we've got a little bit of air coming out of whatever bubble may have existed. When we look on the weekly charts, when we're looking at the number of listings, we still see a steady rise in freeholds and condos. Fantastic to see. This is all, by the way, from Scott Ingram's Twitter post that he does. He likes to do these weekly updates, which I think are fantastic to add. And he says, and with inventory still slowly rising, the rate of sales slowly falling, we're still seeing the market slowly ease. Long way from a buyer's market, but is less hot. That's it. There you go. There you have it. So obviously, as the month stats come out, if we look at week over week, we'll start to see whether, in fact, this trend continues. I really, really, truly hope that it does. But I want to get into our last and final topic here, talking about flippers. Our flippers, not the, how do you make a dolphin? What does a dolphin sound say? No, not those flippers. The contractor flippers, the ones that are buying those houses, increasing the value in these poor low markets, and then just taking it all from us and rising that lower limit on what people can afford and what houses are available. Yes, those ones. Those are the flippers. But maybe they're making less money than you are, the person that's sitting in your primary residence. There's no bigger gambling than house flipping. Let's be clear. Hopefully this segment helps curb that addiction for those of you who are struggling with it. God knows addiction hotlines don't work. They'd be way more profitable or way more successful, these hotlines for addictions, if they said that 1 in every 5 callers was a winner. I think that would actually probably cause a worse problem. But we're going to talk about flippers. We're going to talk about flippers today. Toronto real estate flippers aren't making the price gains being talked about. We've all heard it. Everyone's friend has a friend. They're making a buttload flip in Toronto real estate. Considering the benchmark price has jumped $155,000 over the past year, flippers may be rolling in the cash. Diving through April sales data, flippers definitely make up a big chunk of listings. We'll talk about the numbers. But while they're making decent money, they aren't capturing nearly as much as the headline numbers would leave you to believe. Here we go. Over 3% of April listings were bought less than 3 years ago. So that's our category, if you will, of flippers. Within the last 3 years, you buy, you sell, there's 3% of them were sold in April. Here we go. They say recent purchases made up 3.17% of listings, but median, listen to this, median increases from purchase to list price, comes at 20.84% in April. That works out to a median increase of 100,000 right on the nose. So if you flipped a property in the last few years, on average, the median would say you've made $100,000. Not super impressive when the average person has made 155. For context, Toronto's composite's 155 across the greater Toronto area compared to a year ago. So you're not even beating the guy that did nothing. Come on now. That's a lost gamble, no question. Just over a third of Greater Toronto properties sold in the same month listed. The segment produced 264 sales in April after being purchased fewer than 3 years ago. It works out to nearly 1.93% of homes sold in the month. So less than 2% in Toronto are doing this flipping. So there's not a whole lot of people doing the flipping. And then the ones that are, the median gross gain for those who did it in the GTA is 119,000. That's just a touch over half the composite gain. So they're not even keeping up with the hold part of the buy and hold, right? So there are a few takeaways. Number one, flippers are making money. They are making money, but they're not nearly as much as people think. That's what they say. Number two, they manage to capture about 50% of the headline gains less their costs. This is before their costs. We'll talk about that in a second. The second takeaway is more of a question. If returns are much smaller for flippers, are they targeting cheap properties? If they're scalping just this segment, it may not be a home you want to buy. However, it would be attacking housing affordability in the most predatory way. So if we're starting to see 100,000 grow, but that value is coming on the homes that are worth half the cost of the other ones, that's a significant increase as a percentage. So maybe we are seeing significant percentage increases on the whole, but it's actually just affecting that lower segment. I think that's a fantastic point. But one of the things they didn't mention here is the tax component. Capital gains tax is obviously preferable. If you could hold it for those 3 years and then sell it, you'd be making obviously more money than someone who actually flips it in a few months and pays income tax on that, another component. So if you're not even making the same amount of money and you're paying income tax, that's a lose-lose, not to mention all of those costs. Because realtors these days, unbelievably expensive, ridiculous. But to me, like I said, it shows the value of the hold in real estate. It's not, what is it? What's the saying? It's not what you buy. I don't know. I can't even, I'm not getting into any sayings. I can't even, my lips are broken. Talk too much. Shut up. You just got to listen to the people who have been around in the business for a lot longer, right? There's a lot of cucumbers out there talking a big up game these days, but real estate only gets better with age. Invest like a pickle. The pickle walks into a casino, sits down at a card table, and says, "Dill me in." That's it for now, guys. I'll see you next time. Take care and keep it real.